Will SCHD make you filthy rich? The answer is, as always, it depends. What I can do right here is go into a dividend compounding calculator, throw in some projected numbers in there, and see how the ETF is expected to perform in the future and what your results will be with a certain amount of money you put in. Will this be 100% accurate? No, it never is. But nonetheless, it's fun, so let's do it. First, we need to gather some data for the ETF. We need two basic pieces of information: the compounded growth rate of the share price and the compounded growth rate of the dividend. For the share price, since I could not find it readily available, I will do a quick calculation. At the earliest date for the fund I could find, in the chart, the price had been $24.98. Currently, the price is $69.45. This increase has happened over the span of 12 years. So, if we put this in a compound calculator, the result is 8.89% share price CAGR, which stands for compounded annual growth rate. For the dividend, I will use the already calculated in Seeking Alpha growth of 11.11% for the past decade. Of course, as you can see, for the past 12 months, it has only grown with 5.7%, but as I said, these calculations are never perfect. Now, armed with these two metrics, let's head over to a dividend compound calculator. In the first scenario, we will invest $10,000 once with no monthly contributions and we won't touch it. Then we put the data we have for the ETF, the current yield of 3.77% and the share price plus dividend compounded annual growth rates. We will let the dividends be reinvested instead of withdrawing them. And since I have no idea what your tax rate is, where you live, whether you are even investing in a taxable account, I will simply put 10% tax for the sake of having more realistic view and not leaving it at zero. How long will we do it for? Let's start with 20 years. And the results are, by the end of the 20-year period, if the fund continues to perform the way it has been up until now, which it never does, your initial $10,000 investment will have become $112,937. The dividends you will be receiving will be $5,270 per year, giving you 52.7% yield on cost, meaning you will be making 52.7% of your initial capital every year in dividends alone. Okay, let's spice things up a bit. Let's see what happens on the 30th year. The initial $10,000 became $426,000 and the dividend is $24,000 per year, giving you an yield on cost of 240%. Pretty good. Let's play with the numbers a bit. Let's say you are only going to invest $1,000 every month from your salary without initial starting capital. What would that look like? To check my top 4 ETFs and stocks I invest in for the current environment we are in, go to the link in the description and I will send them to your email for free. The report will always be up to date regardless of when you are watching this because I am constantly updating it. As you can see, the result is an astonishing $959,000 portfolio worth and $43,619 yearly dividend. This is just from investing $1,000 every month consistently without any starting capital. With time, things get really good. Check out the result on the 30th year. Now we're talking. If you commit to investing $1,000 every month for the next 30 years and SCHD performs like it has up until now, you will have a portfolio worth of $3,845,000 with $214,000 in yearly dividends. But we're not done. Let's finally check what happens if you decide to save up a bit more and invest $2,000 in the ETF every month. Your final result is $1,918,000 with $87,000 in yearly dividends. Finally, let's see what the scenario gives us on the 30th year. $7,691,000 and $428,000 in yearly dividends. Pretty impressive. But what if we add $5,000 a month, $19 million, and $10,000, $38 million, and $20,000? Wait, this is getting addictive. You can see how fun this is, and some people really get carried away with it. I have no idea how much these dollars are going to be worth in 3 decades. I have no idea how SCHD is going to perform. Hell, I don't even know if the human civilization will be alive by that time. However, these calculations are not without any value because they show you the power of compounding when you invest in a good asset, reinvest the income you receive, and hold for the long term. It really works like a wonder. This video is part of my extensive review I did of SCHD. To watch the full analysis, click on the link in the description or the video appearing on your screen right now.